analysis in India, only on ET Now.
Before that, let's run you through a quick disclaimer. Please be sure to consult with your individual financial advisors before taking any position in the futures and options space, because while you may make windfall gains, you can also land up losing a lot of money. Dr. C.K.NARAYAN are here with us, so let's discuss with them what they believe the market could do come next week. Dr. Narayan, yesterday, we were discussing how the markets, have ignored some of the bad cues. There's been some confidence which has returned back to the market. We're still not sure of the overall trend, though it looked more to the positive side. Today we've taken a breather of sorts, a little bit of caution coming back.
Yes, indeed, that's the correct word to use. I think it's a little bit of caution coming back, and the caution has also been fueled, I think, by weekend considerations, because most traders were in profits through the week, and I think most of them are taking those profits home. And I think that's one of the major contributions for the decline that you're seeing today. It has pulled back to about 5,060. I think that's where you have the nearest support zone for the market. So I'm not overly worried about the kind of, the kind of pullback that we have seen. I think it's completely in line with the overall picture of the market. This is a rally which has legs up to somewhere around 52.30 at the minimum. And I don't believe that till the ONGC issues out of the way, or till the first bunch of advanced tax numbers come in, which would be between the 15th to the 20th, I don't believe the market will really lose its upside momentum until those days. So it may not go up very fast. That is something we have discussed already. So I think it'll just have this series of up and down moments from here till through about 15th to 20th. But it will still maintain an overall upside bias with a bottom somewhere around 5,000 levels is what I believe as of the moment.
All right, so for every decline to the level of 5,000, you can look at buying into the index right now.
Well, I'm only looking to buy on the dips. So the dips is in progress. 5,050 down to 5,000 levels is where I would look for some sort of reversal signals to show up on my, short-term charts, intraday charts. And if those were to appear, then I would be inclined to go long. So I'm not chasing the market upward. I would rather wait for the declines to buy into. As far as the existing set of strategies, we have somewhat two neutral kind of ones. One is the long butterfly, which is between 5,000 and 5,200. I don't see any reason to disturb that. I think market will retain this particular range for a while. So let's see how that pans out. It's actually a conversion of an existing strategy. The second one we had was a 4,800 and 5,100 triangle. Well, I think the IVs are now sort of starting to, let's say, behave, if I may put it this way, as somewhat normally now, unlike the earlier days when they were pretty strong for whatever reasons. So I see the, let's say, the VIX chart, intraday VIX chart actually pulling down, and maybe the IV should head down to about 24% is what I feel. So that should aid the cause of both my strategies, and I think we would remain in a range, and we would see, the value erosion in the short options that we have. And we look to initiate futures if the market goes down, and maybe we would like to do that on Monday, not on a Friday.
All right, so not taking the risk of the weekend, maybe getting a better outlook once we open for trade on Monday as well.